Hello and welcome to Market Today. I'm Siddharth Zarabi and with me is Atul Kumar Goel, the Managing Director and Chief Executive Officer of Punjab National Bank, a bank that has shown an impressive comeback with net profit up 160% on an annualized basis and almost 36% up on the quarter basis. And joining me now, Mr. Goel, I want to begin by asking you to explain to our viewers the reasons that are behind this very significant set of numbers that you have released.
Yeah, thank you very much. If you see, there is a all-round performance in all the parameter, whether it is the business growth, whether it is a profitability, whether it is a recovery, etc. Also, so even we have done a very good job in the recovery side also. Recovery side, if you see, we have given the guidance for the gross NPA less than 6% and we have already achieved 5.73. Similarly, if you see the net NPA guidance, we have given less than 1%, we have already achieved 0.73. And credit cost has reduced drastically. If you see the credit cost for the last quarter, it is 0.81 and whole of the year it is 1.40. We are giving the guidance that next year it will be less than 1%. So NII growth is there, operating profit growth is there, net profit growth is there. All three number of the last quarter of the March 24 quarter, 10,000 crore plus operating profit, 6,300 plus crore operating profit and the 3,000 crore rupees net profit. It is the highest in the last 16 quarter of the Punjab National Bank. And before I go forward, one number I would like to give you. This we are every month we are taking this number how the new underwriting is behaving from 1st July 2020 to 31st March 2024. It is a data more than 3.5 years. Around 7.87 trillion we have sanctioned, out of which 7.10 trillion we have disbursed and outstanding is around more than 5.53. In this new underwriting, only 1,700 plus crore is the NPA, which is coming around 0.25% of the total new outstanding. And even I can give you the sector wise also. Agriculture is around 0.35, 1.41 around the MSME and 0.22 around the retail. So we have done lot. We have taken a lot of steps how to improve the underwriting standard as well as the collection efficiency.
Mr. Goel, do you expect this growth momentum to sustain, especially at a time when some indicators suggest that the overall macro position may lead to a slight marginal slowdown? For your bank, do you expect this growth to sustain?
As far as PNB is concerned, if you see the growth in the credit is more than 11%. And easily we are giving the guidelines for the 11 to 12% for the next financial year 24-25. And I think it will be easily achievable if you see the industry-wise growth also. And even the Punjab National Bank, 10,000 branches we are having. And good digital platform system we are having. And most important, our focus is the RAM area, retail, agri and the MSME. As on date, my RAM is around 55% of the total book. So we are thinking to increase to this number from 55 to 60%, 2 to 3 years. And we are taking the target 57 by the March 25 and 43 will be the corporate, because we are the one of the largest bank of the country. So we are doing the corporate financing also, and new corporate loan, if any is available to us, we will not mind to give. And there is a good traction in the infrastructure road sector. There is a good demand. Even I am seeing some of the corporate who are involved in the steel and the cement also. They are also thinking for the capacity expansion in the current financial year, which was not the trend in the last year. So I do not foresee there should be any issue to achieve the growth around 11 to 12%. Easily it will be achievable.
Mr. Goel, since you spoke about some sectors, would it be safe to say that you are seeing a recovery in private sector investment, which has been an issue in the recent past? And do you think this recovery in private sector investment is in a few sectors or more broad based?
Actually, as far as, because we are not compromising on the assets quality in any sector, because this is the reason I have just shared with the number of the new underwriting of last more than 3.5 years. So I think we have not faced any problem as far as recovery in the private sector is concerned. So whatever the cash flow we have expected in the at the time of the financing, so there is no issue at all here.
Can we expect a substantial reduction and paring in provisional requirements for the current financial year?
And definitely, it will be reduced. If you see the last quarter itself, if you see the provision requirement of the NP has reduced drastically, it has come to 0.81. If you see the whole of the year, it is coming 1.40. So I am confident in the 24-25, it will be less than 1%.
Okay. What about operational costs as far as the year gone by is concerned, and more specifically the outlook? Can we expect any improvements as far as operational costs are concerned?
As far as operational cost is concerned, I will divide in two parts. First is the employee cost. So employee cost now already the new wage revision has already been done, and we have already impacted the whole impact of the new wage revision in the last quarter itself. We have made a provision around 2,300 from the November 22 to till date, and we have already paid the hike also. And in addition to that, what was the additional requirement for the AS15? Because there is a 3-4 point for the AS15 requirement. First, as per the new settlement, leave encashment entitlement has increased from 240 to 255. So there is a more requirement for the AS15, not only for the additional 15 days, but for the enhanced salary. Second, the pension has been increased on account of the wage revision that was there. And third was because the ex gratia was also given to the pensioner also. So that also impacted the requirement of the AS provision. The fourth was the yield was reduced. December May it was 7.18 and 7.05 in the March. On account of this, the additional requirement for the AS15, which was 2,600, we have provided in the March quarter itself. So it will be reduced in times to come. Salary will not be reduced, but the AS15 provision will definitely be reduced from the 2,600 to in times to come. As far as other operating cost is concerned, so if you see there is no much increase also, around 4 to 5% on the inflation cost etc. considering karke, that remain within the range of the 2,500 itself.
Okay.
Per quarter.
I was speaking with your counterpart in the Canara Bank earlier, and one of the key things that he shared as far as employee headcount additions is concerned, and we know how the public sector banking space works in this regard, is addition of some 200 odd specialized employees on contract to drive the technology initiatives. Is there anything similar that you are also working on and that you could share with our viewers?
Specialized officer in any sector, whether it is a credit or the other, we are also recruiting, and we are having good stuff also, because if you see we are having already 1 lakh employee, and some of the employees are already qualified. They are B.Tech etc. from the computer etc. also. So immediately there is no need, because we are already having the talent. Only what we have to do, right person at right place. That we are doing.
Absolutely. For the year gone by, how would you look back at how your bank has performed as far as technology enabled banking is concerned? That's now the main demand that even customers have, and on the other hand we have seen the regulator get tough with some leading private sector banks. So for a bank like yours, how would you describe your technology improvements as far as banking operations are concerned?
As far as PNB concerned, last full year, there was focus on 2-3 things. Apart from the business and the recovery, there was a more focus on the technology transformation also. And we have taken the very good consultant for the digital transformation also. And last year, around more than 100 product, process and the services we have revamped. and that are doing very good also. And the budget for the IT was around 2,800 for the last year 23-24, against which we have already expended more than 2,000 crore rupees, as some is under process because it will be expanded at the time of the process of the project. And for this year 2,900 we have set a target for the current financial year. So we are very much aware because it is the need of the hour. If we will not do the IT transformation, digital transformation, banking industry will remain, but bank will not.
What about deposit growth, and more importantly, what's the outlook that you can share with us for the current year?
If you see my credit deposit growth, it was around 6.9%. This year we are giving the guidance for the 9 to 10%. Why it was less in the last year? Because if you see my CD ratio, that is around 71%. That we are very comfortable. We have not resorted for the bulk deposit also because we don't require. Because we are having the enough liquidity also, because as on date, if you see, I am sitting on the excess SLR of the more than 1 lakh crore. So deliberately we have not taken, we are giving the focus on the CASA, because if we will increase the CASA, there will be reducing the cost of the deposit also. Last year we have opened more than 1 crore account for the saving bank, as against the around 80 lakhs account in the 22-23. Similarly, we have opened around 2 lakh account, 2.48 lakh account for the current account, as against the 2 lakh account in the 22-23. So money will come in this account also. So deposit is not a issue for the Punjab National Bank, because we are having the network over 10,000 branches.
What is the outlook for credit growth, and if you could give us a breakup both for the corporate segment and for the retail segment, including housing and auto and personal loan segment?
Okay. If you see the credit growth, it was 11.6%, and we are giving the guidelines for the 11 to 12% for the current financial year also. And if you see, the focus area for the Punjab National Bank is the RAM, retail, agri, and the MSME. As on date, my percentage of the RAM is around 55% to the total book, which we are thinking to increase 60% in 2 to 3 years span. For 24-25, we are thinking it should be around 57%, and 43% should be the corporate, because we are the one of the largest bank of the country also. So we are doing, and we will be doing also the corporate financing also. As far as corporate financing is concerned, there is a very good demand from the roadside. Lot of HAP project is available, and in addition to that, we are seeing some traction for the capacity expansion also in the steel industry as well as the cement industry, because these two industries catering to the requirement of the infrastructure, and there is a demand of the NBFCs also.
Since you speak about NBFCs, I want you to comment about the recent regulatory moves as far as exposure of banks to unsecured exposures. How is your bank approaching this risk that the regulator has pointed out towards?
इसमें I will divide into two parts. Basically, there was a concern on the retail unsecured loan. So, out of the 9.85 trillion book, my retail unsecured is very less. It is hardly 26,000 crore rupees. Out of which 26,000 crore rupees, 850 crore rupees for the credit card, education loan around 3,447, and the pensioner, because it is linked with the cash flow. They are getting the pension 4,485, and remaining is the 18,020 is the personal loan. Out of this 18,000, 4,500 is around from the digital mode, and digital mode maybe this is doing very good because the NPA percentage is less than 1%. So there is no worry at all as far as unsecured personal loan is concerned in the bank, because it is a very nominal level as compared to the total size of the credit portfolio of the bank.
Mr. Goel, do you continue to sort of run this part of the book at the same level, or are you chasing growth in this particular segment that you just spoke about?
We are not changing normal course में whatever the growth is coming, because if you see this 4,500 which I told you for the digital mode also, so because funnel is not too large, so whatever they could have used, they have used. So, but we are not aggressively going, because as per the regulator guidelines, they were showing some concern also. We are not giving more focus for the unsecured lending.
Mr. Goel, there's been another draft paper by the Reserve Bank, which will in a way lead to a higher cost of financing infrastructure. Now, infrastructure is both a policy priority, something that the country needs, and most banks are have significant exposure in this space. What kind of impact do you see this proposal, if it were to be implemented, having as far as your bank is concerned?
My take on this will be like this. Point number one, it is a draft guidelines. We should wait for the final guidelines because the RBI issued this paper for making the consultative advice for all the stakeholders, whether it is a bank, whether it is a borrower, all they will take the comment also. Because from the regulator point of view, because it is on the basis of the risk perception, timely completion of the project. So from the regulator point of view, if they are thinking, if project which is under construction, if there is a more risk, bank is required to make the more provision, and after construction, if risk has been reduced, so they should reduce the provision requirement. So from the regulator point, it is okay. But whether 5% is okay, it is a matter of the debate also. So RBI has asked the comment from all the stakeholders also. 15th June is the last date. We will discuss this with the among the all the banker in the IB meeting also. Then we will submit our comment. I think there should not be any panic for this. This is my personal view.
That's a fair point, and we will leave aside what will eventually happen as far as this proposal is concerned, Mr. Goel. But I want you to broadly talk about the infrastructure expansion across the country, both as a banker who has a good sense of this. How long do you think this infrastructure led growth, what kind of steam does this have, and does that continue to provide opportunities for growth for a bank like you?
Definitely, infrastructure will definitely is the opportunity for us also, and we have made a tie-up with the some of the institutions who are involved in the infrastructure finance, like IRDA, like REC, and we are going to make another tie-up with the another infrastructure finance company also. So because if the big project with the long gestation period, they are coming with them, if they are not in a position to getting the entire requirement, so some of the part they can give to us also. Because if you see there is a lot of scope also available in our country, because we are in the stage of the development, we want to come in the developed country also. So definitely it is an opportunity for us also, and we have seen in the past also. Even if we will take the example of the road project, after this change in the model from the normal toll to the HAM project also, the delinquency has reduced substantially also. I do not foresee any challenge in the infrastructure finance in times to come.
Okay, one last point that I want to ask you, and this is something that we discuss every quarter, and which is what is likely to happen to interest rates, both from a macro repo perspective and more importantly for your borrowers, what can they look forward to?
In my personal opinion, I think we have already reached the peak also. Because if you see the position of our country as far as inflation is concerned, it is well in control as compared to the globe also. We were thinking the rate cut will come, but it has already been delayed. So in short term, because it depends on so many other parameters, what is the position of the globe, what is the other commentary also. So I think we have already reached the peak also, and it is a matter of time when we will see the rate cutting in times to come.
Okay, and for your borrowers, will it be an early Diwali, or will they have to wait till perhaps the next year to see some relief?
We should hope for the good. They should celebrate good Diwali also, but it is very, because it depends on so many macro and the another factor also.
Absolutely. Between now and then, there are a lot of factors to play out, including what happens in the monsoon and the resultant overall impact on the economy. Mr. Goel, as always, it's been a pleasure talking to you. Thank you very much for taking out the time to take us through your latest set of numbers and the outlook for the current financial year. Viewers, with that, it's a wrap on this conversation with the Managing Director and CEO of Punjab National Bank. We'll be back with more. Until then, goodbye.
If you like the video, do like, comment, share and subscribe.